Welcome into the reaction channel, folks. Got a few things to discuss in this video here today. So last night on the main channel, Financial Education, I did a video called 2 Stocks I Will Buy Nonstop the Next 90 Days. And in that video, I also spoke about a few other subjects, and one of those was avoiding dead money stocks and how to best avoid those. You're sometimes going to, unfortunately, invest into a stock that maybe it doesn't crash, right? Maybe you even make money on it, but it's kind of dead money, and you hold it for years and years, and you look back and you're like, dang, I haven't really made crap for money on this stock. I hold one of these type of stocks right now. I want to speak about this, if I'm going to keep this stock, if I'm going to get rid of it, if I am going to keep it, what's keeping me in it, if I'm going to get rid of it, why I'm going to get rid of it, because I think it's actually a really important subject. So I hope you guys really enjoy that piece at the beginning of this video, okay? Public count, baby. Look at that. Inching closer and closer and closer to $4 million. Oh, I can sniff it. I can smell it, man. It's right there. Come on. Like, just do it already, public count. $3.94 million. Congratulations to everyone that closed at an all-time high here today or was very close to an all-time high in your portfolio. Congratulations to you guys. You deserve it. Google stock continues to roll heavy. This stock now up 60+%. I posted this on my X page here today. If you don't follow me on X and you ever want to follow me on X, I always have it linked in the description area of all my videos. But I posted on my X page here today. I said I just, made 60% of the stock pretty dang quick. I believe this stock goes to about 275, and then we have a pretty good period of time where the stock just kind of chills out. So that's what I think is kind of going on with Google right now. It's 251. There is a stock that is a constant buy right now, including today. And I'm going to speak about that stock in this video here today. I haven't spoke about it in a little bit here. And yeah, the stock is just an absolute constant buy. It was down here today, and I just looked at the stock and I'm like, such a great buy right now. Okay. After we get done going through that stuff, I got 3 little clips I want to react to in this video here today. First one up here, Cam Dawson on the equity market and her views on where this market's headed from here. Then I'm looking forward to this one. The economy and market are strong, but seeing signs of slowing. I think this was an important one to react to because, I think it's debatable if the economy's strong. So looking forward to reacting to that one. And then Tom Leawitt on CNBC yesterday, I want to react to his clip here on where he believes the market's headed from here and all that good stuff. By the way, I appreciate everybody joining me as always. One thing only I need from you guys. Could you please just hit the like button? Everybody that's already done it before, I had to ask you, thank you for that. And everybody that hasn't already hit the like button, please just hit that like button for me. That's all I need from you guys. If you want to be subscribed here to the channel, you can certainly subscribe. It is free to do so. That will help you see more of my videos in the future. And I think we're at 108,000 subscribers now on the channel. So yeah, that will be down there. Okay. Alrighty, guys. So let's talk about this stock that is dead money for me. What stock is it? It is PayPal. PayPal. PYPL. I've made a whopping 11% on this stock, $13,000, right? Now, if this was a relatively new investment, great. That's a great start, right? But the fact is, I started buying the stock, we can say 2 years and 4 months ago in the public count, right? So almost 2.5 years ago, started the position. And I don't have a lot to show for it, just to be quite frank, right? I mean, think about the stock market itself is up dramatically more than 11% since that time, right? And that doesn't matter if you look at the S&P 500, if you look at the Qs, heck, even the Russell 2000 is likely up way more than that. So the Dow Jones Industrial Average, doesn't matter what index you look at, it's up way more than that. You can even look at inflation. If you factor in how much inflation's gone up roughly the past 2.5 years, you could say this is arguably lost to inflation, right? So PayPal has just been a dead money stock. It's exactly what we spoke about last night in the video, right? So what's going on here? Why is this stock dead money? Do I need to get rid of this stock? Well, here's the deal, okay? This was PayPal's latest quarterly report. PayPal described it as strong. PayPal had a strong second quarter, right? So what does a strong second quarter mean for revenue? Net revenues increased 5%. 5% is not bad, but it's also not great, and it's not the sort of numbers that you get everybody excited about to go buy that stock, right? Like 5%, people are like, that's kind of sleepy. And you got to keep in mind, PayPal used to be a company that would grow kind of similar to like a Google, a Meta, and Amazon, companies like that, right? Well, the thing is, Google, Amazon, Meta, companies like that, you know how fast they're growing revenue? Double-digit clip. PayPal just grew revenue 5 whopping percent. Now, to make matters even worse, you would say PayPal's what? A fintech company. Well, what are some other fintech companies out there that are very, very popular? Well, I can tell you some. Coinbase, Robinhood, SoFi. Look at those companies' growth rates. And you'll see why no one wants to buy PayPal. Because they're like, why would I want to buy PayPal with 5% revenue growth when I could go over to SoFi and get what? 40% plus revenue growth? Look at the Hood's growth rates. Look at Coinbase, those sorts of companies. So people are like, why do I want to own PayPal once again? Like 5% revenue growth and these other companies growing like this? And you got to understand, a lot of people are growth investors, growth traders, right? And so they look at a PayPal and like, put me to sleep, 5% revenue growth. And so this is helping kind of lead PayPal to just be a dead money stock, right? Now, additionally, if you look at PayPal and Venmo, they're having trouble really growing their user base. Active accounts grew from 429 million at the same time last year to 438 million. So they had about 9 million active accounts, which might seem like a pretty decent number. When you're on a base of 400 million plus active accounts, that's not much. It's only like roughly 2% growth year over year. I mean, that's just, a lot of people are going to look at that and like 2% growth. I mean, you got these other companies growing users, at double digit clips like it's nothing in the fintech space. And so PayPal growing 2%, people are like, that's almost stagnant, right? Now, to be fair to PayPal, right? Listen, PayPal is still innovating. This just came out yesterday. This is brand new news. PayPal, on the heels of PayPal World announcement, a global platform connecting the world's largest digital payment systems and wallets, PayPal today introduced PayPal Links, a new way to send and receive money through a personalized one-time payment link that can be shared in any conversation. So let's say, I don't know, you are somebody that details cars. Okay, you go to people's house, you detail their cars for them, right? Charge them whatever amount of money. Well, now with this, you could just send over this link. Maybe they contacted you via Instagram, so you send over the link, through an Instagram DM. Maybe they text you to schedule the car detailing, so you could send it over that way, right? Real easy, real seamless. This, I gotta say, this is a type of thing that I feel like PayPal should have been doing 2-3 years ago, right? If not 4 years ago, but it's here now, okay? Finally here. PayPal users in the US can begin creating personalized payment links today, with international expansion to the UK, Italy, and other markets starting later this month. By making payments this simple and universal, PayPal Links helps drive new customer acquisition and brings more users into the PayPal ecosystem. The peer-to-peer, P2P experience is about to go even further. Crypto will soon be directly integrated into PayPal's new P2P payment flow in the app. This will make for a more convenient way for PayPal users in the US to send Bitcoin, Ethereum, even PayPal USD, and more, right? PayPal, as well as a rapidly growing number of digital wallets. So, great. It's great to see, right? But it's something you looked at and you're like, PayPal should have already done this 2, 3, 4 years ago, right? But the moral of the story is they got it done. It's good. They are still innovating, right? Alex Chris is pushing the company forward. The last CEO just really let him down because, like I said, this should have been something that was done under the last CEO's man. This is it's a great feature. Like, it's phenomenal, right? Like, I could see even me doing this back in the day when I had my real estate marketing company, right? Where I would do videos and photo shoots and things like that for folks, right? And all my customers would either contact me via email to book me for jobs or via text. It would have been great to just send them an easy link. Like, here's a link, boom, right from PayPal. It's just frustrating that it's taken this long. Like, I'm like, this is something that should have been done years ago, just to be quite frank, right? But it is a good feature and it will help PayPal adoption. Now, here's the deal, okay? When it comes to me looking at PayPal stock, and I say this stock has been dead money for me for nearly 2.5 years. Do I go ahead and cut loose the rest of the shares? Do I buy more of the stock? Do I just hold this stock? Those sorts of things. I've got to look at things like the forward P. I got to look at things like, what is the expected earnings per share growth, right? And do I think that's accurate? What do I think is a future revenue growth? Well, if we look here, PayPal trades at a forward P of 13. Now, once again, that's always an estimate, but that should roughly be in line, right? We can say somewhere between 12 and 14. So 13. Next year, expected earnings per share growth is expected to be, let's call it, very nice double-digit growth of 14 to 15%, somewhere in there. Next year, revenue growth is 6.5%. Here's the deal when it comes to if I'm going to cut this one loose or not. Listen, I can't cut this stock loose. I can't do it. It's at a forward P of 13 with double-digit earnings per share growth and mid-single-digit revenue growth. I just can't cut that one loose. Like, it's just too attractively valued. And even though it's been dead money for me, I can't cash it. I can't cash out, man. It's just, at the end of the day, like the likely investment return for me over the next several years is too attractive. And so although it's annoying, and I'm like, I've held the stock for nearly 2.5 years and I've made hardly any money, it's annoying, but at the end of the day, like, I can't really cut a stock like this loose. Now, if the company's revenues were going down, that would be easy. I'd be able to say, you know what, the company's revenue is going down. This ship's, it's going down like the Titanic. It's time for me to get out. That'd be easy. But with, mid-single digit revenue growth, I can't really cut that loose, right? Now, additionally, when you look at this company, look at the operating income on a trailing 12-month basis. I mean, it's sky high. It's higher than it's ever been. So it's a company that can throw off operating income of $5 to $6 billion a year. The market cap of the whole company is a little over $60 billion. And they're throwing off $5 to $6 billion a year in operating income. Whew. Now listen, with all that operating income stacked to the sky, you know what they can do? Massive share buybacks. When you do massive share buybacks, you end up skyrocketing your earnings per share because you're taking way more shares off the market, right? So, I mean, these are all things to factor in here that are very, very important to consider, right? Now, this is our earnings per share. We're looking at 1000xstocks.com, right? This is our earnings per share. This is where we're at right now on a trailing 12-month basis. This is where we're expected to go. And I have no reason to disbelieve this. When I look at what's going on with the operating income of this company, right? When I think about how many shares are going to be able to take off the market over the next few years, I have no doubts in my mind that earnings per share is going to skyrocket right up like that, if not even a little bit higher. So it's very difficult for me to cut a stock loose. It's likely going to have double-digit earnings per share growth per year for years to go in the future. That's trading at a forward P of 13. That's tough, man. That's really, really tough. So PayPal, one side of me wants to cut it loose because it's been dead money. The other side of me looks at the numbers, the math, and says, you can't cut that loose. Come on, man. What are we doing here? Okay. Alrighty, let's talk about another stock that is a constant buy. It was down here today about 3%, but this stock's just a constant buy. This is a stock is a buy yesterday, it's a buy today, it's a buy next week, it's a buy next month, it's a buy next year. This is one I just got to continue to load shares up and load shares up of. And you know what stock that is? I love this stock. I absolutely love this stock. And I have $175,000 invested in the public account. I want to have even more. And I have a bunch invested in other portfolios as well. And you know what stock that is? It's so beautiful. It's a Cheesecake Factory. It's cake. So this is where the company's earnings per share was on a trailing 12-month basis. This is where it's headed, and this is where it's likely headed, okay? Cheesecake Factory is in a great cycle right now of earnings per share growth, margin growth, revenue growth, everything across the board for this company, overall company growth, right? This is the operating cash flow of the company on a trailing 12-month basis. Very impressive. This is operating income of Cheesecake Factory on a trailing 12-month basis. Very impressive, right? And we know a lot of their growth is not really coming from the Cheesecake Factory side of the business. It's really coming from North Italia, Flower Child, and some of the other FRC concepts, okay? Now, additionally, look at shares outstanding. We're headed right in the direction you want to be. It'd be one thing if they were diluting shareholder value and the shares outstanding were going up like insane, right? But no, shares are going down while the operating income's going to record levels and the operating cash flow is going to record levels. I like what I see here, right? Additionally, if you look at Cheesecake Factory on a year-over-year change of revenue growth, we're on the upward trend, right? A little under 6% now at this point in time. And I think revenue growth could continue to accelerate, even though I wouldn't call the economy necessarily strong right now. I think there's a high probability the revenue growth continues to move upward, and a lot of that really is on the back of, when I say upward, I'm talking about 2026, 2027, 2028, and really a lot of that's going to be upon Flower Child growth and North Italia growth, right? Which is going to be very, very strong. Now, with the labor market kind of weakening a little bit, you could say, well, that might hurt Cheesecake revenues a little bit in the short term. That's a potential. That's always a potential, right? If we have a little weaker economy, that's totally potential. Now, keep in mind the economy could go the other way as well. But the one kind of good thing, if the labor market continues to lighten up here and weaken, is Cheesecake will be able to, remember, they need to build a massive quantity of Flower Childs in North Italias over the next number of years. And what happens? You use a lot of labor when it comes to that. If the labor market's not as strong, you can get much better workers to work in your restaurants, right? and to open your restaurants, to do all the construction work that needs to be done and all those sorts of things. So these are all things to kind of factor in here when it comes to Cheesecake Factory. So you can say, well, one might be a negative, but then it turns into a positive, right? So the moral of the story is here, cake's a buy every single day, every single week, every single year, basically, for quite a while. Until their growth story is not there anymore. But when is their growth story not there anymore? 2040 maybe, 2050, and then we'll be talking about the stock doesn't have any growth. But for the longest time, they're going to have so much expansion opportunity for North Italian Flower Child. It's ridiculous, man, absolutely ridiculous. Okay, alrighty, guys. Before we get into the reaction videos here, my private stock group will be the pinned comment link down there here today. If you want my entire library of premium courses like Become a Master Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, Financial Statements Mastery. If you want access to my private Discord chat, if you want access to 1000xstocks.com, exclusive weekly videos, ability to see all the stocks I'm buying and selling, my nearly $4 million Fidelity account, right? All that good stuff will be basically the pinned comment down there. You can apply to join us in there. And also I wanted to answer a couple kind of questions here, right? This individual yesterday said, I'm going to book a call tomorrow to join your private stock group. That's awesome, right? Somebody said it's $1,100 a month. It's just not true at all. Like $1,100 a month, that would be like $13,200 a year to join a private group. No. Like even if you got a lifetime membership to my private stock group, right? It's still not even remotely close to $13,000. And that would be for a lifetime membership to my private group and 1000xstocks.com and the Discord chat and all my courses. No, it's not even in the same ballpark as $13,000. Okay. So like stuff like that, I see that sometimes and I'm just like, where does that come from? $1,100 a month is not $1,100 a month. So that's just, ridiculous. Another person asked a question about my private group. I have a question about joining your private group. Can we do or take a look at people's portfolios and give feedback? We have a portfolios tab so people can give feedback on your portfolios. I don't personally do it. As far as looking over your portfolio and things like that, like you need a financial advisor or somebody to do something like that. But, I teach you everything I got up here. Oh man, I keep minimizing the same thing. I teach you everything that I got up here in my head about running portfolios on a high level, right? So, my goal is to teach you everything you need to know so you don't even need to question whether your portfolio is good or whether your portfolio is diversified. Like when you go through those course curriculums, that's going to teach you. So like you could ask for a second opinion on it, right? And ask private stock group members, what their opinions are, because obviously we're loaded with just a ridiculous amount of 6-figure, 7-figure, and 8-figure investors in there. But at the same time, like my goal is to teach you so much that you don't even second guess yourself. You're confident that your portfolio is well built for the next 5, 10, 15 years, okay? All right, let's react to some videos.
Etheridge, Trivariate's Adam Parker still with us
Adam
at this hour. Cameron, let's start with you because we were just talking about whether the economy is slowing down. If it is doing so, is that consistent with where you see valuations in the equity markets right now?
And when you join us in there, we'll send you your Steel membership cards to 1000X and to the private stock group.
Certainly not. We don't think that the equity market is signaling any concern about a more meaningful slowdown in growth because, as you said, equity valuations are at 22.3 times forward. You also have earnings estimates that continue to go up. You've added about $7 a share to 2026 earnings estimates. Now, for 2026, up to $302. It should be noted, though, that those earnings revisions higher are coming from just the Mag 7, a very small cohort of stocks. You actually are still cutting equal weight estimates. So to Adam's earlier point, the market is not the economy, but because earnings estimates continue to move higher, you're in an environment where stocks can continue to press higher.
And it may speak a little bit about what Adam said regarding productivity and kind of how that's working its way into corporate margins as well.
Yeah, I mean, to get look, it's innocent until proven guilty. All the original AI investment, we're told, back half of 26 into 27 is we're going to see the productivity from the company. So what are you going to learn in the next 3-4 months that's going to derail your dream that we're going to have productivity in 27? Not much.
Right.
So if you're anchoring to the median company can have margin expansion a year, 18 months from now, and you're anchoring to a more dovish skew to the Fed, that's the cocktail for bullishness. We got to watch out for froth, crazy valuations, all that kind of
In
stuff.
just a second here, I want to tell you guys the stocks you need to watch out for in this market right now. Like, the stocks that could be a big trap. So in terms of stocks that could be a big trap in this market, okay, that you need to be very wary of, look at stocks that are crashing in this market. Be very worried, be kind of a little scared of those. So if you see some stocks that in the past 2, 3, 4 months have gone down 20, 30, 40%, and there's some of those stocks out there, I would be a little worried, because something's got to be, like, there's got to be something fundamentally people are really scared of to be selling off those stocks when you got a market going to all-time highs. Because you got to think, where would those stocks be if you had a weak market? If those stocks are going down, in the past 2, 3 months, 20, 30, 40%. So I'll give you a good example of a stock that I'm, kind of intrigued with, and a stock that I'm, kind of like, oh man, I kind of want to buy this stock a little bit. But let me show you this stock here, okay? So this stock is Cava. So Cava is a perfect example of exactly what I'm talking about right now, okay? So if you look at Cava, the stock's just been kind of like crashing for a while. Like, even look at the stock back in July, right? Let me get rid of that there. So you can see even back in July into August, the stock was $88. Right now it's all the way down to $63. So on a year-to-date basis, Cava's down 45%, right? On a 6-month basis, Cava's down 18%. If you look at Cava on a 3-month basis, down 18%. On a 1-month basis, is down 8%, right? So this stock is just incredibly weak. And, that kind of scares me a little bit from starting a position in Cava, because I'm like, geez, if a stock's that weak with this sort of market, imagine if the S&P went down 10, 20%. Like, where's a stock like Cava at then? You could be talking about $40, $30 a share, right? Maybe even $25 a share, which is, a long way down from where that stock is right now. So just keep that in mind.
The North Star is we're headed higher over any meaningful period.
Malcolm, in the short term, you think tomorrow will be a sell the news event. Do you think it will stay lower, that equity valuations will stabilize lower after tomorrow? Or do you think it will be a short-term phenomenon?
Yeah, I think it's more likely to be a short-term phenomenon. I don't think that investors are likely to suddenly find religion tomorrow and start focusing on valuations in comparison to the promise of AI, like Adam was just saying. I think more than likely it's going to be a short-term knee-jerk reaction is sell the news and then figure it all out from there. But I definitely think that the guidance or the lack thereof on what the next cut will look like will suddenly have traders trying to parse out, where does the Fed go from here? How much impact does the White House have on the next round of cut or cuts? And will we actually be able to posit the fact that maybe this means something for the economy, maybe this means something politically? Those sorts of ideas are the ones that are really going to drive the conversation the last quarter of the year. But I think more than likely investors are going to focus on AI above all else, and the party will keep on going.
Oh. Yeah, and that lack of clarity speaks to what we were just discussing with Steve Leisman regarding, whether there will be an inclination to give forward guidance if there's not consensus within the Fed. Cameron, given the equity valuations and where they are, how fragile, how sensitive do you think the markets are to any kind of a negative shock at this point?
The biggest saving grace for markets right now is that institutional investors, based on the Deutsche Bank consolidated equity positioning as well as Goldman Sachs index, that these investors are still relatively neutral and even slightly underweight positioning. That still means that you have this potential for a positioning chase higher. But as we move through the fourth quarter, we think that the higher that this market moves, the more fragile it is to incoming data that potentially challenges this very optimistic view about growth. So when you are priced for perfection, you do need perfection. And if we were to say rally to 7,000 by the end of the year, which is some price targets that exist, that you would be trading at 23 and a half times forward earnings. And that's an extraordinarily fulsome valuation. So it probably is more of a 2026 issue than it is necessarily something that investors will consider for 2025, simply because that positioning is still light to neutral.
Yeah, the tough thing about the market right now, you look at, when we talk about a 23 forward PE on the market, right? Definitely high based upon historical standards. Like, a lot of times you expect forward PE to be 17-ish, somewhere in there. Now, sometimes it can be lower than 17, sometimes higher, but 17-ish, let's just call it forward PE, kind of normal for the stock market. The issue is, the biggest stocks that matter the most to the stock market, right, in terms of weighting, those companies are growing revenue at strong double-digit clips for the most part. Like, you look at the very most important stocks in the market, they're companies like Nvidia, companies like Meta, companies like Google. Like, you can go down the whole list of them, right? Like, look at those companies' revenue growth last quarter. Amazon, they're all growing double digits and some extremely strong double digits. So that's what makes it a weird, different market than anything we've ever had in the past. Because in past markets, the top of the market was companies like ExxonMobil, Chevron, Johnson & Johnson, Procter & Gamble, the financials, the big banks, right? Listen, those companies were always known as like safe, stable business models, but sleepy, right? Coca-Cola, Pepsi, these companies used to dominate the stock market in terms of that top part of the stock market. But those companies you always thought about as kind of growing revenues between about a 3 and 8% clip a year, right? Now the stock market's dominated by the biggest tech companies in the world, like Nvidia, Meta, the whole list that we just went down, Amazon, Google, blah, 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 right? Microsoft. These companies are growing revenues year in and year out at double-digit clips. That's just not normal. That's not something you were ever used to in the stock market. It used to be the biggest companies in the world were sleepy, boring, 5% revenue growers, like a PayPal, right? And now it's just not. And so that messes up the forward P, because we look at the forward P and it's like, wow, it's higher than it usually is. We can make a very strong argument that it should be, considering the top of the market now is a bunch of double-digit growers. And back in the day, it was a bunch of sleepy stocks. So something to factor in there.
Day with the stock market at record highs, the 10-year yield back down to 4%, gold up 40%.
Before we get into this one, let me just state my opinion on the economy. I think the economy is just a very meh economy right now. I don't think the economy is great right now. I also don't think it's a disaster zone right now. I think it's very meh. And I think this economy could go either way in 26. I think we could either talk about a strengthening economy in 26. I think we could also talk about an economy that gets worse in 26. So that's kind of my view on the economy. So whenever somebody says, oh, the economy is so booming right now, I'm like, I don't think it's booming. Like, just based upon kind of what I look at for the overall economy, right? Once again, take us out of Nvidia, Meta, those companies at the very strongest. Like, I'm looking at a lot of mom and pop businesses, right? Small business. I'm looking at consumer sentiment. I'm looking at the real jobs picture, and it feels very meh. You know, not great, not a disaster, very meh. And so that's kind of my view on the overall economy right now, which the economy is not always the stock market, right?
How do you view the risk reward into the Fed?
I think what's really interesting is how the shift in focus from the market has been on inflation and what the Fed's going to do, to now a weakening labor market and a slowing economy and what the Fed is going to do. The bond market is telling us the Fed is certainly going to cut. We've seen yields come in a lot in the last few weeks. And yet the equity market continues to hit new highs, saying we don't need to cut. Everything's running along smoothly. So it's a little bit confusing, the signals we're getting from the market. But I think the reason the equity market continues to run is because the expectation is the Fed is cutting not because we're in trouble or because we see a recession. So they're viewing that as a positive signal from that Fed. Yeah. But Neuberger Berman's expectation is right in line with the markets of a 25 basis point cut tomorrow.
Do you see the market continuing to rally? A lot of people see this as a buy the rumor, sell the news. There's a risk that he's not quite as dovish as the market is expecting.
Yeah, I mean, the market is strong. The economy is strong, driven by the consumer. We saw retail sales come in this morning 3 times higher than consensus. Now, August is a strong month. It's back to school. There's lots of spending, but that's a significant growth over consensus. And the earnings came in. Expectations were a little bit under 5%. They came in 12%. Companies are strong. Lowering rates is only going to strengthen them because the burden of the interest expense will be lower. And lastly, there's this CapEx spend that's been announced by the Mag 7, $500 billion expected over the next 2 years. we don't know, those companies don't know what the technology of the moment is going to be in 12 or 24 or 36 months, but they are committed to not falling behind. So I think that CapEx spend is a little bit of a stimulus in the market, certainly for tech stocks in the Mag 7, which we've seen come up 50% since the lows in April. So the economy seems strong. The market is certainly strong, but we are seeing signs of slowing, not concerning. We're seeing signs of a weakening labor market, which is really what I think the Fed is telling us. The most recent JOLTS numbers suggest that there are more people looking for jobs than there are jobs available. The labor market's weakening on supply and demand side. I mean, companies are not firing, but they're not hiring. Our jobs added is significantly lower than it was 12 months ago. So when you look at the unemployment number, 4.6%, in terms of a historical context, that's still a very low number. But if it's on the rise, that's something that the Fed needs to focus on.
I just have to completely disagree with the economy being strong this year. I mean, you guys know I live in Vegas. Vegas numbers have not been strong, right? They have not been strong. And if we take a peek here, I want to take a peek at, all these companies that you would usually look at, and if you felt like you had a really strong economy, like how are these sorts of companies doing, right? So we would look at companies like a Bath and Body Works, right? Does that look like it's a booming, economy right now for Bath and Body Works? Not really. The stock's down 10% this year. If we look at a 5-year basis, like look at where Bath and Body Works is, look at it as now. Does that look like a strong economy? Not really. Look at Nike stock, right? That's another good one. Oh, you know who else we could look at? Because I just thought of them. Let's look at Lululemon. How's Lululemon doing? Does that look like a really strong economy to you? Whirlpool. Look at Whirlpool. Yeah, in a really strong economy, people should be buying new washers, dryers, appliances. Appliance sales are not good, right? We could even look at LVMH, Louis Vuitton. Does that look like a really strong economy to you? Not really, right? Look at Starbucks, Does that really look like a super strong economy to you? I mean, this stock has gone nowhere the past 5 years. Look at a furniture company like RH. Does that look like a strong economy to you? Look at somebody like Target, one of the biggest retailers out there, at least in the United States of America. Does that look like a really strong economy to you? Target stock's down about 40%. So, these are, on the list I just took you through, those are many of the most important companies, retailers you can possibly look at in the United States of America. And just, none of them are necessarily saying, oh, yeah, that's a super strong economy. Economy's on fire. No, it's a very meh economy. Right? And you look at consumer sentiment numbers. Does that say super strong economy? No, consumer sentiment's in the dumpers right now, right? If you want to look at small business optimism, look at all this different stuff, and it's going to show you, no, we don't have a strong economy right now. We need to just quit saying that. We got a strong stock market because of the top of the stock market. But then you go to a lot of those companies beneath that, a lot of those companies under $100 billion market cap, and you see, there's a lot of weakness. Deep weakness, like stocks down 30, 40, 50% the past 5 years, right?
OM is definitely beating the S&P for the quarter to date. Would you stick with that, assuming we get at least a rate cut tomorrow?
I think we're going to get a rate cut tomorrow. And I think, look, we believe in broad-based diversification within your portfolio, but the S&P is driven right now and has been for 2.5 years by this bundle of 7 securities, and we just don't see that falling away. So we're mindful of the valuations. We're mindful of the unintended consequence that a 70% cumulative market has given us over the last 2.5 years. It's great because the market's up 70%, but client portfolios, as we've discussed before, have unintended risk through overexposure. So there's also some uncertainties that we don't know about. We've been talking about the trade talks with China. Secretary Bessent was on this morning talking about that. There's a lot of geopolitical risks. Tariffs are at 10%, but once these pauses end, they're going to go up to around 18%. Now, no one knows when the pause is going to end.
Or if they're legal.
I mean, just a few tidbits to sort out here.
Right.
But there are some uncertainties. So we think the market's going to continue to rise, but we are cognizant of the risks. So we are neutral in our allocation, an overweight to small caps, which we've been talking about, which is disappointed up until August. But in August, the Russell 2000 beat the S&P by 3 times for the month.
I think you could make a much stronger argument that the economy is actually weak rather than strong. You know my feeling, I feel like we're in a May economy. I feel like it's not necessarily weak, I feel like it's not strong. I feel like it's meh. But I think if I had to make a case about the economy strong or weak, I think I can make a way more compelling case that the economy in 2025 is weak. Very weak. I could make a much stronger case as far. I mean, you could even look at, you want to know another company? I'll tell you another company that sales have literally been in free fall, right? You know what company that is? And they're supposed to be growing like insane. You know what company that is? Tesla, Tesla. Look no different than Tesla. Like, if we're in a super strong economy, why has Tesla sales been so trash the past year? I think it's a fair question. Now, so you might say, well, Elon, and everything he's posted over the past couple of years on X, and that's made his customer base extremely mad, and so no one's buying Teslas anymore. Like, you could make that argument, right? But the moral of the story is, like, you look at all the price cuts they've done, and they were supposed to have this insane growth. Elon Musk used to talk about, we're going to grow 50% a year, right? And their sales are literally going down. If it was a super strong economy or a strong economy, right, should Tesla sales be going down? Shouldn't they be going up significantly, right? So these are all fair questions, right? So once again, I think you can make a stronger argument that the economy is weak rather than strong, but I feel like it's meh. Tom Lee.
Oh, a big anniversary day for Fundstrat.
It is indeed. It's our 11th year since we started Fundstrat, which was September 15th, 2014.
Blink of an eye.
It's a blink of an eye, yes, because this is still mid-cycle for the bull market as well.
All right, so since you said mid-cycle for the bull market, let's get right into the record highs that we are seeing. If it's mid-cycle, that kind of implies maybe third, fourth inning, maybe fifth at the latest. Is that how you see things for this rally?
Yeah, I mean, I think some parts are later cycle, like part of the Mag 7 trade. But I do think AI still has many years to just propel earnings surprise and innovation and economic growth. So I don't think it's late. Like, it's too late. It's not too late to buy the Mag 7. But I think the next leg of this is really the Fed cutting, helps the ISM get back above 50, brings down mortgage rates, so it's a cyclical broadening trade. And then I think, financials I think are still important because I think that they're going to re-rate more like technology stocks. Goldman and JP Morgan are basically technology companies now. And as they embrace the blockchain, they're going to become more streamlined and less employee dependent, much more AI driven. So I think there's a lot to look forward to.
Now, if that is the case.
So I feel like as far as bull market goes, he mentions about we're still, mid innings in a bull market. Here's how I would frame it. Okay. 2009 through 2019, we had a bull market. Now, we had some drama along the ways, right? 2018 was kind of a warm-up drama for what happened in 2020, right? 2020 broke the bull market. It was no longer a bull market, right? That crash. Then we started to get kind of more into a bull market again, and then we had the 2022 debacle, right? Which ended that bull market, which was a very short kind of bull market there and into a bear market. And then I feel like, since the fourth quarter of 2022, we've been in a bull market. But I feel like you can't just say, well, since 2009, we're in a bull market. No, there's been too many corrections, crashes, pullbacks that we've had since 2009 to say that whole time was a bull market, right? You got to categorize it as this time. Because otherwise, if we really want to play that game, we could say we've been in a bull market for the last 100 years. Look at where the stock market was 100 years ago. Look where it is today. Oh, the whole thing was a bull market. I mean, we could take it there if we want to take it there. Could we not? Of course we could. The whole thing's a bull market. It's always a bull market, right? Because the stock market just goes up over time. But you would never categorize it as that because you're like, well, we had the Great Depression and then the stock market crash, right? And we had this in the 40s and we had this in the 50s and we had this in the 60s, this in the 70s, right? You would never just say, oh, it's been a bull market for the last 100 years, even though I guess we could say that. But you're always going to have these break periods where you're going to get a pullback in the market, or you're going to get a mild to medium correction, or you're going to get a severe correction like what we had back in April, right? Or you're going to get a crash in the market, right? Which is, where you'll see the S&P 500 go down 25% plus. You'll see the Nasdaq go down 30% plus, right? And then you go into your next bullish cycle. So, yeah, I wouldn't just chalk it all up as a big bull market, because then we say, okay, we had a 200-year bull market now.
You mentioned that it's because of a possible rate move lower and a trajectory of lower interest rates. Just how critical will it be to this market to have those lower interest rates? And do you think that there is a post-Fed playbook for what those companies are going to be?
Yes, I think it's really important for CEOs to be confident the Fed is cutting, because we know the labor market has slowed, maybe even wobbling. And that's because businesses are cautious, and the ISM reflects it. It's been 31 months below 50. The Fed can actually re-inject confidence by saying we're back into an easing cycle. That helps businesses get confident and expand again. So there's a lot of legs to this if the Fed cuts, and I think it's real. It'll be a real improvement in liquidity.
You alluded to some of the places that could see the biggest impact.
Yes.
But can you take us through those? If you had to put a top three together about where you think the most activity or juice could come from if the Fed were to embark on this path. I think of maybe home builders. I think of other parts of the market, maybe technology based on valuations. But in your mind, what are the places that are going to reap the most benefit from that?
Yeah. So I'm looking at September 98 and September 2024 as the playbook, because those are both years where the Fed was on extended pause and they cut in September. The number one trade is Nasdaq 100. So I think that's why the Mag 7 and the AI trade gets a lot of lift off. The second is monetary liquidity sensitivity, global central banks easing. That's Bitcoin and Ethereum, and seasonally strong. I think they could make a monster move in the next 3 months, like huge. And the third, of course, is interest rate sensitives. That's really small caps and financials. But really, the first two might be the standout trades.
All right. Because you mentioned the crypto side of things, you're actively involved now. It's not just...
Okay, yeah, I don't need to hear Tom Lee talk about crypto here. But yeah, I mean, small caps should, in theory, be the play for the short term, given, next cut cycles here. But with that being said, many times in the stock market, whatever is supposed to happen doesn't actually happen. But technically, the small caps should roll for the next several months. But we'll see what happens with that. And if the small caps do roll, it's going to be fun times for a lot of stocks. The Cheesecake Factory type stocks, Fubo, maybe even stocks like ELF continue to roll heavy, Celsius, maybe even stocks like SoFi, right? Even though SoFi is well over a $10 billion market cap now at this point in time, right? I think a lot of those stocks would see a lot of momentum if we get a small cap rally, okay? Appreciate y'all joining me as always. Thank you so much for being here. Thank you for being subscribed to the channel. Additionally, if you're looking to apply, join our private stock group, private wealth group, looking to get your knowledge game up to a much higher level, download everything I've learned up here over the past 17 years directly to your brain. You can go ahead and click the pinned comment down there, fill out a forum. Let's get you in there. Let's get you playing this game on a high level. Much love and have a great day.